All right, traders, George here, and time for the weekend review. We'll look at 4 key markets here and just make some very quick comments about their current state. Starting out with gold, we were already looking for this short target here from last week to be undercut and a follow through to move lower. This is the zone that we were talking about that would act as potential support. We broke a little bit lower than this and then recovered it. So 1150 acting as support. At least the bulls are trying to hang on there, and there's a bit of short covering happening there as well. But a negative turn for gold in that it traded below its first target here and below this substantial bounce beam. So that is a very negative follow through to this bullish impulse being completely retraced and price driving lower. So that is the big news from gold last week. Here's the big news for oil. Just a coincidence that it's Pi Day, and I happen to have Pi listed here on the chart. That's in reference to how I came up with this swing low. It has to do with Pi and some previous price action that occurred. The big news for oil is that after it made this bullish impulse up, it started to chop up sideways, and the bulls just could not hold any semblance of support here. So basically breaking down below 48s was the kiss of death for oil. There's a pretty good air pocket below and just pulls it straight down to 46s. Even more so as we drove into the close on Friday, just keeping price very well suppressed here at about 45 on the nose. We're really at the absolute floor of all this trading commitment. So this very good bullish impulse here has literally been completely undone here, and price is below all the most intense trading commitment that's been made since this bull energy came back in. So this is an extremely negative turn for oil, and it really begs for lower prices altogether. But as the weekend review goes, this is the most important thing that happened was the bulls let go of 48. We're clear below this dominant trading zone here, and you see that air pocket effect. Bam, down it goes. $2 in oils, $2,000 on one contract. If you happen to be short there, why wouldn't you be? And bounce attempts don't look to be anywhere near on the horizon, at least yet. So that's the takeaway from last week, is that air pocket pulling price down. You see it in all markets, and oil's no exception there. Talked about it before it happened, and there's the follow through. Always good to get that belief building from stuff we talk about and then the follow through. Let's move over to equities now. Now we're on to the Dow futures here, and just like all 3 equity futures markets, the big ones, the S&P, NASDAQ, and Dow, the Dow had its most recent commitment at the top undercut, and the week basically saw some stronger sell impulses coming, as they always are stronger on the sell, to retest this breakout level. And then here it had a follow through and basically found resistance at that zone and drove to new structure lows here on Friday, but also getting a bounce. So where we are right now is 17.6s are acting as support. And what was a resistance zone up here would still be looked at that in the low 17.8s. And below the lows of last week would see this air pocket likely to pull us down another 300 points or so to about 17.3s. So the takeaway from last week is that this breakdown here had a good follow through. That's something that we are on alert for and looking for, and the trade opportunities on these bounces intraday obviously pretty good as well. But this is the big turn here where this support turns into a resistance zone and we make new structure lows. So the big takeaway from last week is that that actually occurred. They let go of the low 17.8s. That's turned into a resistive zone now. And if we rally up from 17.650s, we've got basically just under 200 points to go up to that level. 200 points easily attainable in one day for the Dow. If we start trading over that, guess what? We're back into this air pocket, and we're very likely going to retest the highs. So this will be what we look to next week, but the follow through action is the takeaway from last week, and that also means that if we get a continuation below 17.6s here, that we're likely going to see at least a 300 point sell off to a very key support level. And below that takes things into a new area we haven't been to for a while. So some bearish follow through there, with price stalling out at a very key zone. That's the takeaway for the Dow. We'll also look finally at the euro. I've just gone to a fresh chart on the euro here. I cleared off everything, but the breakdown here for the euro in this follow through is something that we had talked about and we're looking for, and you can see we're really pressed to some new lows here, and this is something that requires us to go further back to look at more data. So I have preset lookbacks on all my charts for the balance beam, but this one begs to be looking further to the left to see where we've come from. You can see all of these key support swings here are basically in the 1200 zone north. They've all been completely breached to the downside for the first time in many years. This support swing here has been undercut. The next one is here. This is a key resistance swing right there. So just based on the monthly chart, these are the next two levels below. And this has got falling knife written all over it. It already did earlier, but this follow through that we saw last week is really what we need to focus on when we review the week to see just how strong that price action was. It had a breach through this level and did an outside return, put in a resistance swing there, and then drove straight down and really is punching through that next zone altogether. There were some forecasted areas that I gave for some targets down here. They were all math based and really begs to have this redone, and we'll probably do that Monday for the week ahead. But for the week in review, what you need to remember is that we've taken out some key math based target levels that are just as relevant as actual physical support and resistance levels when they're done correctly. And so what I would have you remember is how this all set up. There are two videos that show the initial setup and then the follow through and then where we are today. And you can see how that was all driven by some very simple if-then around some key price points, and then as we have covered in training on Fridays, how to come up with those targets and where they're most likely to be. Really could not resonate on a larger scale any better than what's happened with this euro breakdown. So all these key markets here, gold, oil, the euro, the Dow, NASDAQ, S&P futures, they're all starting to see some more sell pressure, with obviously the euro, oil, and gold being in what I would call severe bear markets right now. The S&P Dow and NASDAQ are basically just taking a little bit of a breather until we get some more red flag information, which has not yet showed up. But we'll be on top of that in the next series of videos, getting set for next week. Thanks for all your comments in the live room and tolerating my voice here as I fight this cold. Should be back 100% by next week. Look forward to seeing you all in the room, and that'll do it for now.